Hello, this is Gary Kamen and welcome to Trends and Futures Position Update for Friday, April 27th. TGIF. Today I look at softs. Here in the U.S., first quarter GDP grew less than forecast, rising 2.2%. Expectations were 2.5%. Earnings at Amazon and Expedia beat estimates, and as of 11 a.m. Central Time, the Dow was up 17, the S&P is up 1.25, and Nasdaq's up 14.5. The U.S. dollar is getting hit by the lower than expected GDP, now down 186. Crude is down 31 cents and gold is up $3.80. June natural gas is the only energy up today, up 29. Remember to look at the weekly charts to check out the COT report this weekend. In softs, cocoa's up 34, coffee's up 105, and orange juice is up 220. Sugar's down 26, lumber's up $6.90, and cotton is down 109. And the first market I look at on Fridays is cocoa. And currently in July 2012 cocoa, there is no trade we're managing right now. We have a buy trigger on a close above 23.55 and a sell trigger on a close below 20.47. That puts us below 20.50 here. 23.55 puts us right in this area here. Last week, ADX numbers were 15.7. This week, ADX numbers are at 21.7. You see that there. You can see here on the modified ADX numbers never got below 20 here. Here they did. But either way, it's a weak trending market. The market's in a range. Bottom of the range is 20.50. Top of the range being broken today is 2300. Last week MACD was riding up over the signal line and was bullish. This week MACD is still riding above the signal line with some divergence here, and I'll still say MACD is bullish. Last week in cocoa we saw stochastics just getting into overbought territory. See that there? This week in cocoa, stochastics are in overbought territory. You see that there? It's a weak trending market. We have to be careful of a correction down from possibly 2300 here. If we do close above 2355 here, trend trader will recommend a long, and if we close below 2050 here, the trend trader will recommend a short. Here's a red technical trade signal right in here, and here's a green one right here. So it may take some time for trend trader to issue a position in this market. And after cocoa, we'll look at coffee. And we're looking at July 2012 coffee. Trend trader recommended a short January 30th, right in here. At 222.25, open trade equity as of close April 26th, which is 175.85, is a potential profit of $17,400. Second resistance is at 179.25. That's giving us a potential profit of $16,125. And the buy trigger is at 189.25. That's locking in $12,375 of open trade equity right there. You can see how the numbers have changed from last week. Not by much. Last week we saw ADX numbers down to 20 here. See that there? This week we see ADX numbers at 26.7 or 27. You see that there. DI plus is still over DI minus, and that came up on this move up here off of 175. You see that here? Last week MACD was just riding the signal line with no divergence. This week MACD is just above the signal line with a little bit of divergence. You see that right there. Last week stochastics were oversold, looking to want to come up. This week we saw stochastics actually come up out of oversold territory on this move up off of 175, but have now come back down in oversold territory. Because on this move up here for 3 days, the market took it all back in 1 day. Look at the red candle. And that's okay because we're short the market. But we're still managing $17,400 in open trade equity. Take out $16,000, take out $15,000, take out whatever you'd like. All you have to do is adjust your stop. It's that simple. Here we see a red technical trade signal right in here. As DI minus crossed DI plus back in here, we don't see this area here because now we're looking at the modified ADX. So that's coffee, and after coffee, we'll look at orange juice. And in July 2012 orange juice, trend trader recommended a short February 21st at 176.75. Open trade equity as of close April 26th, which is 145.70, is a potential profit of $4,657. Second resistance is at 149. That's locking in $4,162.50, and the buy trigger is at 162.10. That's locking in $2,107.50. Last week, ADX numbers were 42. Strong downtrending market. This week we see ADX numbers dropping to 30. You see that there. DI minus is just bouncing up off of DI plus now. And that's because the market looks to be getting in a range here between 140 and 150. You see that there. Last week MACD was just crossing up over the signal line. This week MACD is up over the signal line with just a little bit of divergence. Last week we saw stochastics coming out of oversold territory. We're mid-range and coming up. This week we see stochastics mid-range and coming up. And you see what happened back here? Stochastics just dipped back into oversold territory, came right back up. And that's because of the candle right here traveling through the range. Here's a red technical trade signal right in here, allowing you to ride out this move up here. As the market breaks down below 175, you see that right there. So currently trend trader is managing $4,657 in open trade equity. You see how the numbers have changed from last week? Take out 3,000, take out 3,500. Again, all you need to do is adjust your stops. And after orange juice, we'll look at sugar. And we're looking at July 2012 sugar. Trend Trader recommended a short April 10th at 23.16. Open trade equity as of close April 27th, which is 21.25, is a potential profit of $2,139.20. Second resistance is at 22.22. That's locking in $1,052.80, and the buy trigger is at 23.65. That's giving us a potential loss here of $548.80. Last week, ADX numbers were at 21, and this is on the non-modified ADX. It shows no strength of trend to this move down. This week, ADX numbers are at 42. You see that there, showing a strong downtrending market. Last week, MACD was bearish. See that there? This week, MACD has dropped some divergence, but it's still bearish. Last week's stochastics were in deep oversold territory. This week's stochastics are in deep oversold territory. Strong trending market, I'm not concerned about that. Last week, here's a line here at 21.60. Scales have changed. The line here now is at 21. You see that there. Here's a red technical trade signal right in here, getting you into this trade a little bit earlier, but not a bad time trade if you wanted to miss this area here. Trend Trader took the short position. Now we're managing some nice open trade equity of $2,139.20. Take out $1,000. The only thing you don't do here is let this trade turn into a losing trade. And after sugar, we're going to look at lumber. Now Trend Trader exited a short position from March 20th, which it got into at 274.90 on April 20th, last Friday, at 257.70 for a potential loss of $88. Last Friday's update, I did mention that was going to happen. Trend Trader then took a long position April 24th at 280.60. Open trade equity as of close April 26th, which is 280.20, is a potential loss of $44. Second support's at 275.47. That's giving us a potential loss of $546.30. And the sell trigger's at 263.03. That's giving us a potential loss of $1,932.70. And 263.03 put this all the way down in this area here. Way too far from the price action. Last week, ADX numbers were at 14. Weak trending market. Market's in a range, 265, 275. This week, ADX numbers are 31.7 or 32. This has become a strong uptrending market. And you see the market broke through 275, 280, and now 285. Last week, MACD was moving up off the signal line, adding divergence, and MACD was bullish. This week, we see MACD crossing the zero on the histogram line, adding additional divergence. See that there? The MACD is bullish. Last week we saw stochastics getting into overbought territory. This week we see stochastics still in overbought territory. As ADX numbers rise, I'm not going to concern myself with that. The market is up today, and hopefully we see the market break through 290, maybe retest 295. That'll add to open trade equity, which I'm sure will be positive tonight. Of course, you saw DI plus cross DI minus back in here. You saw MACD adding divergence, and you saw stochastics correcting out of oversold territory back in here. And you knew the market was in a range, and you're swing trading. So for a swing trade over 270, you might be in a position to take advantage of this move up here to 280. Just food for thought. And after lumber, we'll look at cotton. And in July 2012 cotton, Trend Trader recommended a short April 4th. After this large drop down here, open trade equity as of close April 26th, which is 92.11, is a potential loss of $1,425. Second resistance is at 93.36. That's risking $2,050, and the buy trigger is at 92.68. That's risking $1,710, and it's the same number as last week. Last week, ADX numbers were at 16.3. Weak trending market. Bottom of the range here is 88. This week, ADX numbers are at 26, showing some signs of strength to the move up, but I'd still say this is a weak trending market. And 26 is being shown here because of this move up from 88. You see that there. Unfortunately, we're dealing with a large range here between 88 and 94. And we knew the range down here was 88 because of what happened back in here. So when the short position was taken, I said to watch for a bounce off of 88 here because it happened back in here. Last week, MACD was just crossing up over the signal line on this move up from 88. This week, MACD has moved further up off the signal line with a little bit of divergence, but is now crossing the zero on the histogram line. And because of that, I'll say MACD is bullish. Last week in stochastics, we saw a correction from oversold territory. Stochastics were mid-range and coming up. Weak trending market. Oversold condition, we expect a correction here. This week we see stochastics just getting into overbought territory. You see that right there. So when this trade recommendation was recommended, you were warned about a bounce off of 88. I hope you listened to that warning, and I hope you managed your risk accordingly. Now, cotton is the last soft I look at on Fridays. I am going to add something to today's update, a soft summary. The reason I want to show you this is because people ask me all the time, where do you get out of a trade? I don't wait to get out on the trend trader exits. Why? Because trend trader exits way too late for my liking. So in coffee, the short position we're in currently, open trade equity is $17,400. And resistance, the reason this is resistance is because we're short. If we were long, it would be support. So this number represents an area I'd probably want to get out below. Taking out 16,000 out of this trade or 15,500 in that area. Not $12,000. You're giving back too much money. Look at orange juice, look at sugar, and look at the potential in profit and loss. Open trade equity, if we got out of all these trades last night, we would have pocketed $22,727. Support and resistance numbers, we would pocket $18,743. And the trend trader exit triggers, you'd pocket $10,381. Personally, I'd rather see all of you put $8,000 more in your pocket. So this is the soft summary, and that is it for today's position update. Until tonight when Trend Trader issues new trades, have a fabulous Friday, and as always, be well, trade well, and follow the trends.